traders, back to another valuable lesson. So let's discuss why I always emphasize to have as little your personal opinion as possible in the market, and why do I think it's useless. And we'll also talk about the importance of making strategic changes means you are actually adapting to the changing market behavior instead of just being too stubborn or too biased on a specific direction. So before we get started, let me talk about some of the things. So this week, I actually took two losses. So one was on gold short. I'm on a replay. So I took a loss on gold, shorting around at 33.72, expecting price to push lower. At the same time, I also took a loss on euro dollar as I saw the strong selling pressure. I was expecting price to drop all the way back into 114.26. And if you look at my Telegram channel, you can also see that you go down, you can see that, you see I took the sell limit on euro dollar and I got stopped out. And yesterday I highlight some of the important thing, which is we don't have enough evidence to short gold. In fact, it's looking very strong as it's holding above 33.69. I also made a video talk about why am I changing my bias, acknowledging my personal mistake on shorting that euro dollar, and basically just talk about making strategic changes. So now go back to the chart and let's talk about my mistake on euro dollar. So euro dollar. So I took a short on euro dollar and my entry was at 115.94. I think somewhere around there, and my stop loss was around 30 plus pips. So I was shorting because on the short term, I realized that price was breaking below this 115.95. And again, don't get me wrong, we have already made money shorting pound dollar. So the entire trade idea, the concept was there. So we're simply just trading our initial bias, our initial trade idea, because we have already made money shorting pound dollar here and also here. So shorting euro dollar was actually a good decision, but my mistake was I overlooked an important support on the left, which is this 115.84. I was too focused on this short-term SNR and I neglected that, hey, we have not even closed below the support zone. And we have a key strategy, which is a TPF. The overall trend on the high time frame is still bullish. And if you go down onto the 4 hour was also pointing bullish because market did a strong sell to the downside, breaking below 115.85. But guess what? We had an immediate recovery back up, and we in fact are holding above the TPF zone. So TPF is just like a head and shoulder. We're holding above the shoulder zone. I should not be too quick to hop onto the sell. I should have at least waited for a stronger closure below this 115.87, then only look for a sell. So by taking that short, I made a mistake. I made a mistake that I had not waited for enough confirmation. So that's the one thing. Gold was a decent loss. So I took the trade because I've already taken multiple wins. And in fact, for the past 3 months, I've made 200 over 1,000 just on shorting gold. So to me, shorting gold was simply just sticking to my game plan because at that point of time, I was looking at price action like this. So we have strong rejection at the high. That's why I was looking for price to continue go back below the zone. And price, in fact, it dropped below that 33.61. So what's this big candle? Trump. So we have Trump's speech here. I was glad that last Friday we shorted gold, all of us shorted together, and we closed it before the speech, and we made about 2 hours. And then Monday we were looking for a re-entry to the downside, but guess what? Another Trump speech, and it completely flipped the sentiment of the market back up again. So now go back to the title of the video. Why did I not look for further short after I got stopped out on gold? Because we only trade our game plan. You can never trade without a clear game plan, without a clear filtering process, because you could be easily being caught in just being too biased, or you're just gambling the market. Because in between, some of our traders, they were trying to ask me, hey Neoh, can I short into 33.90? Because 33.90 is also an important resistance on the left. But I say no, because don't ever forget your initial game plan and your invalidation point. Previously, we were looking for a short because gold rejected that 33.74. Right now, price is actually holding above both 33.62 plus 33.74 area, which is here and also here. We are not allowed to short anything above because it could be just pure personal opinion. That means you are just being too biased on the sell. And human is a funny thing. As becoming a highly profitable trader has a lot about countering human nature, countering that regular human instinct. If you look at your own performance, you realize that every time when price goes all the way up, you're looking to short. When price goes all the way down, you're somehow looking to buy. So becoming a good trader is about making strategic changes as per what you see, which is what I always say, trade with the evidence. Don't trade with your personal opinion. Because when you trade with your personal opinion, you are not going to stick to your playbook. You are not going to stick to a trade management plan, your re-entry model, your entry model, blah, blah, blah. You're just going to end up blowing up your risk management by being too biased on one direction, one-sided. So a simple thing is, look at your journal and see if, let's say you're going through a losing streak. If you're on a winning streak, stick to that direction is a good thing because you're sticking to your winner. But if, let's say today you're going through a losing streaks, but if you look at your journal, it's 10 shorts. Let's say it's all short and you're still looking for further shorting, you are just being blinded. Okay, so that's the number one thing. So I just want all of you to remember through this lesson, your personal opinion is the least important thing, because you see, even me myself, there are times where I'll make mistake. For example, this euro-dollar trade, I call it inside our group, I took the sell and I lost $12,000, and that's fine. Because you know why? After I got stopped out, guess what? We started making strategic changes. If you go back to my Telegram channel, you can see that I acknowledged my mistake. I did my review for many hours. I was sitting in front of the chart, cleaning up every single thing, cleaning up all the drawings, just to replot my SNR zone and reanalyze the market from a neutral standpoint. So why am I changing my bias? Even me, at this level, I still have to constantly remind myself that my personal opinion does not worth any piece of shit. Sorry for being rude, but yeah. So if, let's say, you're currently going through drawdown, have a look at your performance, have a look at the trades that you take, the quality of the trades that you take. Are you really trading with the evidence? Are you really trading what you see? Or are you just blindly trading what you think or what you expect? Because expectation, opinion, does not worth any penny in the market. So like gold, right now price go all the way up. What's my game plan? I won't do anything. That's it. And I go back to reassess the entire market, and turn out we find out that there's high quality opportunity on dollar CAD short, and there's high quality opportunity on buying buying Aussie dollar. So these are things that only once you start throwing away your personal opinion, then you can start seeing a complete different perspective, a complete different clarity in the market. Then you can go back to trade well. So I do this every single week, multiple times a week, to ensure that I personally is trading alongside very closely to my personal strategy, my system. So if my system tells me no, even if my mind tell me yes, I will still say no, because I've said this before as well. I trust my trading system. I trust my entry, trade management, risk management model more than me. Because as a human, we are vulnerable to emotional behavior. And that's why have a mechanical approach. Have all your rules clearly stated out. What can you do? What can you not do? Allow the rules, allow the SOP, allow the system to guide your action. If, let's say, you are every day you sit there and say, I need to have better emotional control, it's useless. You're not going to better manage it, because all you do, you're having wishful thinking. The best traders are those that organize their action to manage their emotional behavior. Okay, so don't rely on emotion, rely on a system, rely on clear written rules, and that will allow you to recover a drawdown and also trade as usual, because that's also the only way that you can know losses that you take are all ordinary. Because some traders go through a long losing streaks, they don't even know what's wrong, and in fact they don't even put in the effort to study their journal, to review their own journal. So don't become that kind of trader, and I hope you'll learn something new from this lesson as well. So yeah, if you like it, please don't forget to like and subscribe, and I'll talk to you next time. Bye bye.